Microsoft and Sony signing a 10-year deal to keep Activision's Call of Duty on PlayStation. That is alleviating some antitrust concerns that Microsoft would use its power in the gaming market to cement dominance after the close of its $69 billion deal for Activision Blizzard. The news comes after an appellate court judge denied a last-minute bid by the FTC to delay that deal. There's now just one global regulator in its path. The UK's Competition and Markets Authority extended its final deadline to review the deal to August 29th due to a detailed and complex new proposal from Microsoft. Joining me now to discuss is Alex Kantrowitz, big technology founder and a CNBC contributor. Good morning, Alex.
Morning, Frank.
All right, so what's your take on this deal? We've seen a lot of, twists and turns when it comes to this deal, including a last-minute bid by the FTC to block it, and also this news about Call of Duty. Who knew that a video game would have so much importance in a deal this size? What's your take on the possibility of it actually going through in this last hurdle with the UK CMA?
I think it's absolutely going through right now. I mean, the CMA was watching the U.S. and the FTC to try to see if it was going to have any success here, and it could stand with the FTC and say, well, okay, we're in solidarity here. We don't want this to go through. The FTC is out of the picture right now, and now the CMA is saying, all right, what are we going to do? And it's been hemming and hawing, and right now it seems like it's going to accelerate its decision, and this deal could go through fairly imminently.
All right, so you're feeling pretty positive about that. What does that mean for the stocks to see this deal going through? Do you believe that everything's already priced in for this deal going through, including some of these twists and turns and possible concessions that the companies may have to make?
I think it is priced in. I think that the markets have been watching what's been going on here, and they've come to the conclusion that Microsoft's going to win probably in the last few weeks. So maybe you'll see a small bump, once this thing actually goes through. But the real impact is going to be long-term. Like, let's see how Activision actually adds to the Microsoft set of gaming tools, and then actually, might actually end up impacting the business and the bottom line. Because once you put those two together, there could be some, significant growth. And some of these concerns that people have been bringing, that Microsoft might corner off the competition, or the Xbox might, end up taking exclusivity on some of these games, that could actually come to fruition now. And once that happens, we could see something, serious with the stock.
All right, we're looking at shares of Activision Blizzard rising 4%, Microsoft up 0.5%. Hard not to notice Sony down 1%. All right, another story we're watching, Tesla building its first Cybertruck at its plant in Austin, Texas. After shortages in sourcing components caused a 2-year production delay, CEO Elon Musk telling shareholders back in May that Tesla would like to produce 250,000 Cybertrucks a year, depending on demand, giving the company a leg up on EV pickups from the likes of Ford and Rivian. That was the original plan. A lot of people say better late than never. I say never late is better on this one. We've seen a lot of other EV pickup trucks come out, including Rivian's. That's actually now the best-selling electric pickup in the U.S.
Well, I would say that this is going to be a massive hit for Tesla. I mean, the truck looks great. People made fun of it when it came out. It looks great. People are going to want to drive it. They're going to want to park it in their driveways. They're going to want to show their affiliation to Elon Musk with it. And I think it could really challenge Rivian and even some of the bigger pickups. I mean, pickups are the #1 selling car in the U.S., and I think this could nestle its way right in there.
So, by the way, this is an opinion. I think a lot of people just think it looks a little strange. We're looking at it right now, Alex. It's not your typical vehicle. So, yes, it's definitely going to stand out, and maybe some people want to have it just as kind of a status symbol. But it looks way different. So I'm going to ask you two questions. I know your opinion, you like it, but is this the right, pickup truck, I guess, for mainstream America, something that looks so futuristic? And then also, when you see Rivian taking so much market share and you still have the F-150 out there, why are you so confident? What gives you so much confidence that people are going to adopt it?
I think in the U.S. especially, people like to wear their values on the road, or show their values on the road. I think people like to look cool in cars. I think this will make them look cool. They like to look cutting edge. And I think there's something as the association with Elon Musk. He's gotten a lot more political in the past few months, the past few years. And I think that's, maybe that's going to have a negative impact on people interested in buying his four-door cars. But when it comes to a pickup truck, I think that's going to hit. So I really do think that this is going to be something that people are going to want to drive. And it's gonna look cool on the road. I think that it's gonna look different. I don't know. I would definitely get one if I could park it in New York City.
All right, it sounds like you would definitely get one. All right, we got one more for you, Alex. Cathie Wood's ARK Innovation ETF seeing a notable shift over the past 12 months, with investors pulling a net $717 million from the fund since last summer. The ETF, which once had nearly $30 billion in assets under management, has now shrunk to roughly $9 billion due to investment losses and after it missed out on the monster rally in shares of Nvidia. Still, Cathie Wood joined CNBC on Friday. She says she still believes that Nvidia is an incredible play.
If you look at NVIDIA, it is one of the Magnificent Seven. It is an easy way to put money to work. And the excitement around ChatGPT was such that this was the obvious play. It has been the check-the-box AI company for a while now.
So, Alex, to be clear, ARK Innovation ETF, it's doing pretty well this year, even though people are taking their money out of it. What's your take on investors leaving the fund, putting their money in other areas of the market?
I mean, Cathie Wood has said that they're taking profit, but if you look at where it is next to its all-time highs, where a lot of people bought in, I mean, it had more than $6 billion come in a single quarter when it was close to its highs in 2021. I would say they're probably cutting their losses. And, you know, the clip that you guys just played with Cathie talking about how NVIDIA is such a natural stock for people interested in innovation. I mean, to get out of that position in the beginning of the year as NVIDIA has just boomed this year, you know, was not a very good decision. So I don't really think that, you know, this is a moment where people are like celebrating ARK taking profit and shifting it. I think people are ready to move on at this point.
So is that one miss that big of a deal? I mean, we're just looking at the chart right there. ARKK, the ARK Innovation ETF, still up more than 50% year to date. That's still great performance, outperforming a lot of other parts of the market.
Yeah, I don't think the one miss is the problem. I mean, if you extend that chart back a few years, you're going to start to see that it's going to be a downward slope, even though it's popped up a little bit this year. I think that if she had held NVIDIA, right, and that could have made up for some of the losses that the investors, I mean, again, $6 billion in a quarter in 2021, you know, there's a lot of those investors are still in the red. So holding NVIDIA could have made up for that a little bit, but it's the overall picture. It's not just one stock.
So does this, I guess, outflows when it comes to the ARKK, does that also influence some of the company's other ETFs in your mind? Long term, are people just generally losing confidence, or are they losing confidence in this one fund?
Yeah, I mean, you have to look at the investor, right? So it's only been a few hundred million. I mean, only a few hundred million, but only a few hundred million out of ARK. But that fund has gone down of ARKK, but that fund has gone down from about 30 billion at its peak to 9 billion today. So you're looking at the market, you see the S&P is, you know, delivering pretty sizable returns without that big drop. I mean, it's still under, you know, its all-time highs, but then you start to think about where else you're going to go, and the other options look more attractive at this point.